Hi, this is Craig Evans, CEO at Company Watch. Just going to record a very quick video to show you how we use experiments to recalibrate a score. We had an inquiry through from one of our utility clients last week regarding how to calibrate a score, in particular using the calibration for a user case regarding a REIT company. REIT, REIT, stands for Real Estate Investment Trusts. REITs are companies that own and operate finance income generating real estate across a range of property sectors. They're fast becoming an investment portfolio for private investors and a good, reliable investment source. It allows individuals to invest in portfolios of large scale properties in the same way they invest in other industries through the purchase of stock. In the same way that shareholders benefit from owning stock in other corporations, the stockholders of a REIT earn a share of the income produced through real estate investment without having to actually go out and buy or finance a property. So it's a really good way of investing and getting a return. One of the defining characteristics of a REIT is that it's required to distribute at least 90% of its taxable income to shareholders annually in the form of dividends. So as such, REITs are often considered a good investment choice for income investors. So this inquiry was about how can we recalibrate a REIT using that 90% dividend return. So let's have a look at a particular REIT in more detail, and I'll show you how to do that. So if I go into this REIT here, it's called Urban Logistics REIT PLC. And what I'm going to do is I'm going to go into our experiments product by clicking on experiments at the top here. And that's going to produce the profit and loss. If I hover over the current score of this company has got a H score of 68. So what I'm going to do is I'm going to drop down into the actual P&L and balance sheet, and I'm going to make adjustments to this. Now I can make adjustments to the P&L and balance sheet, but I could also add new management accounts in as an example as well. So experiments has a lot of user cases, but in this user case, we're just going to take out the current dividend. And what we're going to do is we're going to put that dividend value back into the current accounts. So if I add the value in of 21,654, which was the dividend payable, that 90% of taxable income, and I'm going to add that in, which is going to make that 791,414. And because I've added it into the shareholders' funds, I've now got to make the balance sheet balance. So if I pop up to other debtors, that's a good place to put the value in there. So I'm going to add these two numbers together, and that's going to make that 43,135. What I can also do now is I can pop back up to the dividend payable in this current year, and I can take that out and reduce that down to 0 then also. So in doing that, if I pop back up to the H score, you should see that there's a recalibration of the score. So the H score is now reduced down to 60 from 68. So this is a really easy way of recalibrating scores and recalibrating the P&L and balance sheet, or for using the experiments tool to insert new sets of accounts, management accounts, interim accounts. So hopefully that's a very quick overview of the experiments product using a user case of how to recalibrate taking the dividend out in the form of a REIT. So hopefully that's been a useful video to share and provide you insights into experiments. Hope you enjoyed it.